Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on November 1st. So I did a webinar last Tuesday, which you can probably find, by the way, at cabotwealth.com. You sign up for it for free. But in it, I talked about how overall I'm quite bullish looking out into next year. Near term, based on some of the stuff we've talked about here, uncertainties like the election and some secondary headwinds, rising interest rates, I think sort of some complacent near-term sentiment. And I mean, just the fact it's been pretty easy. I don't want to say we've been printing money, but it's been a pretty nice 6-7 weeks, pretty easy, as a lot of stocks have raced higher, okay? And usually when that's the case, the market will shake the tree a little bit. And maybe we're starting to see that this week. Thursday was kind of an across-the-board sell day, although so far today, as I record this, we're bouncing back pretty well. So we'll see how it goes. I would just say, looking at the evidence, the top-down evidence was the least good, I guess I would say. We talked about it being powerful but not positive with a lot of indexes. So I would say the intermediate-term trend today is helping, but the intermediate-term trend is sort of on the fence here. There's a lot of indexes kind of not that far above or a little bit below their 50-day lines. Not the be-all, end-all of analysis, but obviously the trend is important to me. The individual stocks, which have been the best part of the evidence, so far the action is generally normal. Yes, there have been some earnings duds. We had to cut a small position from Cabot Growth Investor this week that kind of collapsed on, or not collapsed, but fell pretty hard on earnings. And there have been some breakdowns. I'll show you a couple of those. And we have seen some of the earnings gap ups not really follow through. They're just kind of sitting there. They look fine. So it's not a runaway market. Maybe it's because of the election. Maybe it's because of interest rates. Maybe it's just because people have already bought a lot at this point. But overall, I would just say the action among individual stocks is still normal. Put it all together, where is it at? I'm still bullish, but right now, kind of like the last week or two, still kind of mostly focusing on managing what we already have, some winners, seeing how the rest of earnings season goes. Still a lot of reports to go in growth world. And obviously, pruning things that act abnormally or getting rid of them, and hopefully adding more to stocks that, gap up, or obviously adding some fresh leaders, okay? Like I said, we did a little selling in Cabot Growth Investors model portfolio this week. We're about 23 or 24% in cash or so, and I would say we'll probably stay that way here through next week, election, see what happens after the results, if the results are known. But overall, still leaning bullish and looking, seeing if we can get through earnings season, but then also looking to add, hopefully, a fresh leader or two here in the weeks ahead, okay? Let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ. So far, like I said, it's about 11:30 as I'm recording this. So we're bouncing back pretty well here, which is encouraging. That's what you want to see. But overall, again, here's the NASDAQ. No real, net progress, I guess, since that July peak. But actually the NASDAQ, what's interesting is it's kind of one of the I don't want to say stronger, but in terms of where it is in relation to the 50-day line, back here it was kind of lagging. But now when you look at a variety of other indexes, it's actually one of the better looking ones by a hair, okay? But so still positive, nice bounce back, but again, not a lot of progress. You can see the S&P ticked off its 50-day line, bouncing today. You look at small caps, they're still kind of stuck in this range, right at the 50-day line. If these things broke lower, I mean, it wouldn't be good. I'm not trying to say, well, it doesn't matter. It would matter to me. But it's also, big picture, you step back, you're just kind of in this trading range. And that's kind of that's more sort of what I'm seeing here. Mid caps a little bit better, but again, not really a lot of progress. And 50-day line. Interestingly, the New York Composite, which was sort of the strongest index. I mean, look at the run. This was the August collapse, shakeout, which for the New York Composite was only like 3 days. So it's had a nice run here, but it's had this pullback a little bit below the 50-day line. We'll see if this is sort of a perfect test and we get going from here or what. Bigger picture, just looking at this, it wouldn't surprise me if, on a very, very short-term basis, ideally this is just sort of a one-day shakeout and we ramp from here. It's definitely possible, but bigger picture, wouldn't surprise me if we spend some time here testing volatility, like I said, election, and some of these near-term headwinds that we're going to talk about. Just looking through sort of other index. Oh, I wanted to mention this first. One thing that is encouraging, I mention this every week, but this is the XLP, consumer staples. Not like we saw some huge rotation into defensive stocks during the week or over the last couple weeks. So, that makes me feel better that it's more just sort of a broad, shaking the tree event, so to speak, as opposed to something that's really changing character in the market, okay? When I dig into sort of individual stocks during earnings season. One thing I've seen so far is it's been somewhat mixed. I'd say a little bit more good than bad, but there's been some duds or whatever. But even the ones like this is Intuitive Surgical, which I think I mentioned last week or maybe a couple weeks ago, gaps up on earnings. And since then, there hasn't been any follow through. Now, the stock looks fine. The stock looks totally fine. Maybe it's a good buy here. Not necessarily recommending it here, but I'm just saying, it looks fine, but it's not like one of these gaps like in August and you're just going higher. It's just gap and the institutions are buying. That kind of goes along with what we're seeing in the market. Morgan Stanley, which I know is not, go growth stock, but clearly a, bull market play, very, very strong advance. And again, the stock looks totally normal, just hasn't really followed through yet. Netflix, same sort of thing. Big liquid name, gaps up, looks totally fine, but hasn't followed through yet. It's not negative, it's not positive, it's just kind of telling you sort of the tenor of the market. Meanwhile, we have seen, again, this I don't want to make too much of this because it's not like there's been a tremendous amount of blow-ups, knock on wood. I mean, we'll see what happens. Maybe next week it's a terrible thing. But so far, we've seen a few of these. So it's like Boot Barn. This was a leader that got hit and broke down. Wingstop kind of has been kind of topping out in here for a little bit, but that got really hit on earnings. Robinhood, which we liked, we had a half position in it. Trying to hold the 50-day line here. To me, this looked like kind of an abnormal break on earnings. To me, just kind of gave the entire breakout play up. We'll see what happens, but we're seeing a few of those too. But overall, I would just say it's more mixed during earnings season, okay? Last thing before getting into individual stocks, again, I thought we were done. I thought we were done having to follow interest rates. I thought the Fed had given the all clear. But again, this is the 10-year note. Even today, they tried to dip on, I guess there was a jobs report that was weak. But this is interest rates. So that means they're selling off bonds. Rates are going up. And it's just been all I can say is on an intermediate term basis, it's very strong. Yes, there's overhead. And, I'm not trying to make it out to be like a position you should take like short bonds. But clearly the intermediate term trend of interest rates is up. And there's really been, the pullbacks so far have been limited to a day or two, a few hours really before pullbacks in rates before rates go up again. So, whether that's sort of weighing out, we have seen some degradation in the broad market. I don't have the chart on market surge, but like the number of new lows has been expanding, new highs has been shrinking. Obviously, small caps remain capped, and maybe interest rates have to do with that. But that is just something to watch because, at some point, if interest rates go up here, my guess is, the market's going to have trouble at some point, just adjusting to that, okay? So far, though, we'll just take the primary evidence for what it is, which is on the fence intermediate term, but individual stocks, which again have been sort of the linchpin as opposed to June, July, which was like more about the major indexes and the individual stocks were just okay at best. Right now, the major indexes are just okay at best, but individual stocks to me continue to look pretty good, okay? Just running through names. Some of these I've mentioned before, some of them are fresh. We talked about Rubrik last week. Again, it's an IPO. It's going to be, it's going to be wild and crazy no matter how liquid or not liquid it is. But just kind of this nice IPO base. I like the story. And the lockup, right, you can see the volume expansion here. I think the IPO lockup, that was that week here in September, I want to say. Yeah, went right here in September. But nice action here and kind of a quote-unquote breakout to new highs. We'll see how it does, but RBRK continues to act well. Industrials are sort of mixed. You're sort of seeing, this kind of looks like that chart of the NYSE composite pull back. This is the XLI, excuse me. It pulls back to the 50-day line, kind of like the NYSE composite, bouncing a little bit today. But I am seeing, not a ton, but some, not commodities, but other sort of cyclical stocks look pretty good. This is United Rentals. Now, to be fair, this is URI. It churned a little bit on earnings. We do have a pretty tight stop in here in top 10, but I'm just looking at the chart. Maybe it cracks down, but it looks like one of these stocks to me, maybe if it can resume on the upside, it looks like a continuation pattern overall. Just stepping back, the pullback looks very normal. Herc Holdings, HRI, I might have mentioned this last week, but this had just out of this world volume, kind of a longer term breakout if you look at the monthly chart, if you care about that. But just, clearly a changing character. You can just see years of just sort of just ups and downs and sluggishness and nothing to write home about. And then all of a sudden it just sort of smoke up a chimney here to new highs and no give back at all. This is HRI. Carnival Cruise Line, CCL, a little bit of a reversal yesterday. But again, this is kind of one where you look on the weekly chart, it kind of had trouble with this 20 area for, a year or something like that, maybe a little bit over a year. And now it's changed character. Earnings are out of the way. Again, you're not seeing, it's not like it broke out. I mean, this one did follow through pretty nicely, but it's not like it broke out and it's just up 7 straight weeks. You know what I mean? Where that's kind of what we saw right in August, September. It's a little bit choppier, but to me, very nice action here, tight controlled pullbacks, a little bit of a reversal, so we'll see, but clearly acting pretty well. Granite Construction, so this is just names from all over the place. This is GVA. This one has had a pretty good run. You can see on the weekly chart, it's been moving here for many months, so it's not like the first inning of this intermediate term advance, but I did just notice it this week because you had this sort of wash and rinse, as I call it, or as a lot of people call it. Clearly the stock got hit on earnings and then just found huge volume support yesterday, and so far today finding even more buying. We'll see where it closes. This sort of action can lend itself to do a little bit of this, but if the stock settles down, it should be fine, and overall obviously the trend is still up. Chip stocks are probably this is SMH. Chip stocks remain the I don't want to say the anchor around the NASDAQ, but the AI stuff that was very popular, it just still feels like, after they topped out, my view is like, that's probably going to take some time to consolidate. Maybe it takes through the rest of the year, maybe not. But, you're just kind of seeing a lot of ups, downs, kind of recovers, and you have some sloppy action here. But it's just become more mixed. Some names are set up pretty well. This is Marvel Technology, MRVL, kind of a secondary leader. It hasn't been one of the main leaders out there. But again, kind of this big long base, and again, not the most powerful breakout of all time, but MRVL right here, popping, got hit yesterday, popping right back here to new price highs. I have to mention Amazon just today, just because, this is not my bailiwick, but 200 kind of round number resistance. You kind of have this big base. You kind of have this weekly chart as well. It's just set up very well, nice and tight in here. It's obviously it's not undiscovered, $2 trillion market cap, but a breakout here and some upside follow through would, obviously be a pretty good thing, I think, for the NASDAQ and probably for growth in general. Another bull market stock, Blackstone, looks fine. I think it's hitting a new relative performance peak high today. What I like, besides being the granddaddy bull market stock and sort of whatever, what I like is just you have this long term, this is the monthly chart, sort of cup with handle if that's your thing. And it broke out and retested, probably see it easier on the daily chart. It's like, it looked like it was getting going this time, but then pulled back with the market. And then it breaks out again on the Fed, but then comes back down to the breakout point. Nothing wrong with it, just kind of back down to the 50-day line. And then finally now it breaks out on earnings. Is it ready to run, or is it going to pull back again? I don't know, but overall certainly nice and tight in there, okay? You are seeing some pullbacks. This one's very volatile. It was in top 10 this week. This is POWL Industries, POWL. You can see the stock went from 150 to 280 here in a few weeks. So, I mean, that's very strong, but, it can pull back 10% in a couple of days, no problem. In fact, today it's up 8 or 9%. But POWL, very, very volatile. It had this huge sort of choppy 40% range for a few months in here, including a kiss of the 40-week line. Obviously, it's changed character here. It's freewheeling on the upside, and they don't have earnings for about another month, call it early December. So that looks kind of interesting. Just a couple of names here. So CRDO, this one is one of the newer networkers. I might have mentioned it last week, CRDO. Usually when it broke out here, I was like, oh man, this thing looks great. It's a little smaller, but I'll find a way, let's see if it can grow up. And then just kind of had these wild moves, first with the market and then on earnings. And I wrote about this week, when you see this sort of abnormal selling, the usual thing by far, 80% chance or something like that, is the stock's going to need to take, it's either going to keep going down or it's going to take a long time to kind of repair itself. That's just the norm, okay? So when you see a stock do this and then just go straight back up over many weeks, and really, yes, it got hit the last couple of days, but you see it's all happening above the 25-day moving average. It's not even weak. They don't have earnings here for another month either, probably around Thanksgiving. So CRDO, I am interested in it. Next week, you do have earnings reports from like Arista and some other networkers, so that could affect CRDO and the group, but it is a name that's on my watch list. And then ARGX, which is the name I mentioned a few weeks ago. This is ARGX. Bigger cap, not big cap, but $35 billion market cap, biotech, kind of a pipeline and a product. But without getting into the story, you had this, whatever, I think it was 12 weeks up in a row, a lot of big volume. And it's been tedious here for a couple of months. But if you just look at the chart, you're just like, oh, it didn't do anything wrong, right? It looks totally fine. And then this week, I wouldn't say it's the most explosive breakout of all time, but certainly it looks like it's changing character, challenging the 600 level. So that looks pretty good, okay? And then just to get you, if you want to get a, looking around this week for next week. So just a couple of names. So Sweet Green is, we've talked about this many times, but they have earnings next November 7th. So it's that Thursday, I think November 7th, whatever that is. But kind of a nice sort of tightening little base here near the 50-day line. Maybe it doesn't break out. Maybe it craps out on earnings. I have no idea. But this is one where, a powerful breakout, and assuming the market isn't, completely imploding, would be kind of interesting. TOST, which is one of the restaurant payment operator. Mentioned this before. There's been a couple of times like, oh, that looked like a breakout. No. Kind of like Blackstone. Looked like a breakout here. No. Looked like a breakout here. No. But now maybe, knock on wood, this could be the breakout over this sort of 27 resistance area ballpark. So now it's at 31, but they have earnings on November 7th as well. So see how that reacts. And then last but not least, this is, speaking of AI, like chip stocks, but this is some of these utilities have really calmed down. This is Vistra VST. Again, you're dealing with stocks that move a lot. So if you buy this ahead or after earnings, you have to understand that these things, you can't use a 5% loss limit, So this thing pretty much doubled here, and now it's been consolidating in here. It's below the 25-day line, but I mean, just, this doesn't look, it looks pretty classic, okay? They have earnings on November 2nd. This is the November 7th earnings report here, video. But they have earnings on November 7th as well. And if you're just seeing, CEG is kind of the same thing. Constellation, they have earnings on November 4th, so that's Monday. But the same sort of thing where the stocks went bananas, and now they've been kind of consolidating here for a few weeks totally normally. And if you get some resumption higher, get their earnings, they could be enticing, okay? Back to the market. I mean, overall, we all get kind of close to it. To me, it's a bull market. I'd say if you want to be, if you're looking for something to be negative about, it would just be like saying, hey, I'm going to be kind of stupid and just look at the major indexes, and the NASDAQ hasn't gone anywhere since July. And, the IBD 50 index, which is not a major index, but that hasn't gone anywhere for a while. And the equal weight NASDAQ 100, right, where every stock is the same value, or the same weighting, I should say, hasn't gone anywhere since March. And this is one big top, and we're going to fall apart. I'm just bringing that up just to present both sides if somebody, wants to hear a different side. Overall, I would just say, the onus is clearly on the bears. The trend is still up, or at least neutral in the intermediate term trend. And most importantly, has really been taking the clues from the individual stocks, which there's still a lot of them out there. There's still a lot that are reacting well to earnings, and there's still a lot that are pulling back, but they're doing so normally and usually just above 25 and 50-day moving averages. So if that changes, I'll change. But right now, managing my portfolio, but certainly with a bullish tilt. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.